today's session. So today we are going to continue our chapter number 7. Okay. And this today we are going to discuss one very important topic when it comes to the chapter number 7. We have discussed till now, okay, we have discussed essay 700 to 720, everything with respect to chapter number 7. Okay, we have discussed in detail, we have discussed on the each and every point of those essays. So we have discussed almost each and every aspect of essay 700 to 720. Now it's time that we discuss the auditor's responsibility with respect to the Companies Act. So what are the auditor's responsibility and what is required to be reported when it comes to the Companies Act? So I'll just go to the page. Yeah. So 720, this is done. Now we will come to page number 7.58. That is duties of auditor under section 143 of the Companies Act. We will discuss this in detail. Okay. But till page number 7.57 that we have done essay 720. Any doubts to anyone? Any doubts? If you have any doubts, then I request you to post your doubts, ask your doubts as much as you can, because that will enhance your understanding about the topic. Okay. If no doubts, perfectly fine. Let's proceed to the duties of auditor with respect to section 143 of the Companies Act. Now, what is section 143 of the Companies Act? Can anyone tell me? Anyone? What is section 143 of Companies Act? What it deals about? Basically, section 143 of Companies Act, okay, not only 143 but 139 to 1, you can say 47, that whole chapter, okay, chapter number 10 of the Companies Act deal with the auditor and auditor's responsibility of audit. Now chapter number 10 talks about audit and auditor's responsibility, and one important section, that is section 143. Okay, that is section 143 is very critical when it comes to reporting by auditor, because the reporting by auditor with respect to the Companies Act is governed by section 143. There are different kind of reportings which are enumerated under section 143. Can anyone tell me which are those reportings that are enumerated under section 143? Like there are multiple kinds of reporting. Anyone?
Excuse me, sir. Can you please repeat the question?
Yeah, the question is section 143 talks about reporting on certain matters. Okay, so I would categorize those matters in some buckets. So can you tell me which are those buckets, or basically what are those matters that are there under section 143 on which the auditor is required to report? No issues, I'll tell you. So when it comes
to...
Yes.
Can I try?
Yes, definitely. Why not?
Sir, firstly, as per section 143, subsection 1, the loans and advances, if the company has taken the loans and advances on the securities, whether these are properly recorded or not.
Mm-hmm.
And
yes, you are correct.
Yeah.
Go ahead, no issues, you are correct.
Sir, actually दिमाग से निकल गया.
No issues, perfectly fine. You tried, that is more important. See, the more you will try, the more you will learn about the topics, because at the time of exam, at least you will remember, okay, this was something that I have to remember. Okay, don't worry on that. Perfectly fine.
Actually, sir, I have read and remember also, but abhi bhul gayi.
No issues, don't worry. Okay, no issues. So section 143, basically section 143 is divided, I would say divided in 3 different categories. Okay. One is a proprietary matter, 143.1. When I talk about 143.1, it talks about the proprietary matter. Basically, it talks about, okay, what is the reporting requirement with respect to the some proprietary matters of the auditor. Second is the category of 143.3. That is the main and important category where auditor reports, and there are multiple factors enumerated in that. Okay, not only one, but there are multiple such things which are enumerated under 143.3. Okay, on which the auditor is required to report. Now that is very important part, because that is the second section, I call it. And the third section where the auditor needs to report is the 143.12. That is with respect to the fraud, auditor's responsibility with respect to a fraud in a financial statement. We have seen SA 240, but now we will see from the company sec point of view also. Okay, subsection 12 and subsection 13 with respect to the company sec, section 143. Okay, so these are the three major categories wherein I divide the company sec, section 143. Now let's see each of the section, each of the requirement in detail. Then only we will be able to understand what is 143. Okay. So let's come to page number 7.58 of your study material. So section number 143 is enumerated on 7.58 of your study material. Now what it says that section 143, when you read section 143, it says that every auditor of the company shall have a right to access the books of accounts and the vouchers of the company wherever kept at the registered office or any other place. So wherever they are kept, auditor has a right to access that. First of all, it talks about the right. Okay, after giving that right, 143.1 says that to discharge the duties, okay, as a performance of his duties, an auditor has to inquire into the following matters. So after giving a right, 143.1 places a responsibility on the auditor to inquire about certain matters. Now, if you read the wording, 143.1 is not restricted to any particular entity, not at all, no. So it is applicable to each and every type of company. If I would say, okay, 143.1 is applicable to only listed entities, the answer is no. There is no such restriction enumerated under 143.1. If you read the wordings, there is no such restrictions. As a result, it is applicable to all the companies. Okay, so 143.1 is applicable to all the companies and applicable to every auditor of the company. Like it's a listed entity, private limited, small company, OPC, whatever type of company you say, it is applicable. Clear? Now, what are these responsibilities? What these responsibility talks about? So first is with respect to the loans and advances. Okay, whether loans and advances have been properly secured, the terms are prejudicial to the interest of the company, means whether these loans and advances which are given by the company, okay, are appropriately secured or not, whether they have the security, and whether the terms on which they have been made, whether they are prejudicial, means in the harmful, whether they are the harmful for the interest of the company or its members. So section 1A, 143.1A talks about your loans and advances. Auditor has to report on loans and advances. Second, it talks about on the book entry, that whether the transactions of the company are mere book entry, means in actual there is no sale, no purchase of, or no physical movements of goods, but just the entries in the books of accounts, which are again harmful for the company or are of such nature that they are harmful for the company. So actually it talks about, a kind of a scenario where either your asset or liability is, kind of getting set off, or, book entry, which doesn't have any impact of physical movements of any of the item. Okay, most of the time book entries are represents, kind of, adjustments. So these are kind of adjustments which are recorded in the books of account. So whether the transactions of the company are just adjustments, or whether actually the transactions are taking place on the ground, it talks about the physical verification, also the physical inspection portion of the transactions. Okay, so it talks about book entries. Then comes the third one, very important. Now, here there is one exception which talks about that not being an investment company. Remember that. So, it specifically excludes an investment company or a banking company. Okay. So, not being an investment company or a banking company. So, because for them, they have, they can deal into shares, debentures, and other securities. So, investment company has that role only. But not being an investment company, or not being a banking company, whether they are, share trading, or whether they have sold any of the shares, debentures, other securities at a price lower than what at which they have purchased. For example, I purchased a particular share at rupees 100. Am I selling it at rupees 50, 60, 70, 80, 90? Now, that is very important over here to understand whether, the shares, securities, debentures are being sold at a price less than at which they were purchased by the company. Number one, here, if you see this particular language, it not only covers equity shares, it covers each and every security. So, shares, debentures, and other securities all are covered. Number two, there is no threshold per se. Let's say, for example, okay, below 10% of the actual purchase price, below 20% of the actual purchase price. No, there is no such threshold. So even if you are sold 5% below the purchase price, then only a reporting requirement gets triggered. Okay. So whether the debentures, shares, or other securities sold at a price at which they were purchased, okay, or less than that, then this particular requirement will get triggered. So this is about selling securities at lesser price. Then comes again about the loans and advances. Whether loans and advances made by the company has been shown as deposits. Now, how can you check this particular part? How can you check this particular part? Whether the loans and advances made by the company have been shown as deposits. Can anyone tell me how do you verify this particular part? How will you verify? Anyone?
सर डिपॉजिट्स जब हम करते हैं तो यानी हम बैंक में डिपॉजिट करते हैं तो हमारे पास इंटरेस्ट सर्टिफिकेट भी होता है, तो हम उससे चेक कर सकते हैं ना कि ये डिपॉजिट बैंक में है। और लोन्स एंड एडवांसेस जो होता है वो जनरली सिक्योर्ड भी होता है और अनसिक्योर्ड, सॉरी,
No, go ahead, go ahead. No issues.
तो जब हम
Yes, yes, no issues. Go ahead. No, go ahead, go ahead.
यानी हम नॉर्मल पीपल्स को अमाउंट देते हैं लोन्स के तौर पर, तो हम उनसे भी कंफर्म कर सकते हैं। और जनरली इंटरेस्ट की एंट्री वगैरह होती है तो हम वो भी चेक कर सकते हैं ना।
Yes, yes, very good. Basically, it is talking about the loans and advances that has been given. Okay.
Yes, sir.
Now, here it is talking about that loans and advances made by the company that has been given by the company, whether they are shown as deposits, means whether the true nature of the loans and advances has been hidden from the financial statements. For example, I have given loan to a director, but I have shown as a deposit. I have given a loan to someone else, but that is shown on the head of deposit. It is not loan, but shown as a deposit, because loans and advances and a deposit have a different terms, different understanding. People might have a different view when they see a loan versus when they see a deposit. So here we are talking about loans and advances made by the company. So as a result, whenever there is a deposit, you have to verify whether that is actual a deposit or not. How do you verify whether there's an actual deposit? Based on the details that you need to obtain behind each and every deposit. For example, when there is a deposit, what I will do is I will ask documentary evidence of any of the authority letter. Let's say, for example, it's a electricity deposit. So usually electricity department sends a letter that okay, this is the deposit that you need to pay to us as a part of your security deposit or whatever. So each and every authority, or whenever there is a transaction with a person, okay, sometimes in the normal trading transactions also we have to keep the deposit for the security purpose. So over there, whether there is a specific requirement specifically communicated, so all those things are there that we need to verify to understand whether these are the loans and advances or whether this is the deposits. No, Sumit, there is no connection with respect to NBFC. No issues, Genie, don't worry. Okay. Then it was with respect to the loans and advances. Now that was shown as a deposit. So you can say hiding the true nature of loans and advances. Then comes very important, whether personal expense have been charged to PNL or charged to revenue account. Okay. So personal expense charged to PN, charged to revenue account. If yes, then you need to report. Basically, in income tax also, you have to verify whether any, when you do a tax audit, you verify that okay, whether any personal expense have been recorded or not. Okay. Same way, here also we have to verify whether any personal expense have been charged to revenue account or not. How will you verify this personal expense? Very basic question. How will you verify any expense is a personal expense? Anyone?
So by doing vouching and verification of each and every transaction.
But can you do vouching and verification of each and every transaction?
It is subject to the materiality.
Okay. Anyone else? Okay, I'll tell you. See, there are two type of things that when we do audit of personal expenses that we take.
Are no such expenditure which are being done by the company.
Hmm?
Is there any anomaly which is exist in the company's accounts, because the personal nature expenses are generally not incurred by the company?
Absolutely. So the type of expense plays an important role. For example, hospitality. For example, travel. There are chances you could find a personal expense. Professional fees, legal fees, very rare. Or transportation charges, rare. Purchase related expenses, rare, where you can find personal expenses. So you need to check about what is the type, which particular expense has a higher risk of having the personal expense within them. Based on that particular area, we do a testing. Based on materiality, we pick up samples, we verify, and on the basis of that, we can conclude whether any personal expense have been charged to revenue account or not. So number one, we identify the critical type of expenses. Number two, then we perform the second subsequent step is doing testing, sample basis testing. Plus, if there are controls, we evaluate. So see, whatever we have learned till now, identification of the risk of material misstatement, analysis of the controls, whether the controls are designed and operating effectively. So here also you will check whether is there any control around booking of expense, which may detect personal expenses also. Is there any such control? See, usually here, if the company is small, they don't have the controls in place, or they don't have the strong control environment. At that case, or in that case, you have to do more of your substantive testing. But if it is a big company, good control environment company, properly designed and operating controls are there, and at that point in time you can identify if there are controls to detect these kind of expenses being booked, and accordingly you can rely upon the controls, and then on the basis of that your substantive testing, that's the vouching and verification, will be low. So by this way you can identify personal expenses. And the last one is whether it is stated in the books and documents of the company that any shares have been allotted for cash, and whether the cash has been received of such allotment. And if no cash have been received, then is the books of account, like your balance sheet, is correct. Basically it talks about scenarios where shares are issued but the cash is not collected, and in the books of account they disclose that the cash has been collected. Now it is difficult nowadays to do this kind of scenario. Reason because once you issue shares, no one pay in actual cash, they transfer into the bank account, so there is a procedure for issuance of the share. Okay, but earlier there was a scenario that cash payments were also done, and at that time it was very difficult to identify that okay, whether the cash had actually been received in hand. Now you can easily verify whether the amount has been received in the bank or not by checking the bank statements. You can easily verify the closing balance of the bank. Okay, this is the amount that has been received. So that's why this point becomes very important to understand with respect to the allotment of shares. So allotment for cash and whether the cash has been received or not. Allotment of shares for cash. So this is the 143.1. Okay. Now here under 143.1, if the auditor, okay, is of the opinion that okay, now that is of the opinion that he is not satisfied with the outcome, or he wants to comment on any of the item, okay, then he has to refer that particular item in his audit report. Otherwise, if there is nothing to report, then there is no need to comment on these items in your audit report. So only comment when there is something you say that okay, this is not as per the requirement or not as per the points which are there, A to F. So I will report, okay, only when there are items that have a negative comment or that requires a remark from my side. Otherwise, I will not report on these matters. Clear? Any doubt till now? Okay. No doubt? Fine. Now, the next and very important point that I want to discuss here is section 143.3. Can anyone tell me where you have seen section 143.3 in your audit report? Like under which head or under which paragraph you have seen section 143.3 in your audit report or the audit report that we are discussing? Anyone? We have discussed so many audit reports till now. We have discussed also that okay, where 143 comes. So which was that paragraph?
Sir, is it related to the internal control over financial reporting?
Other
143.
responsibility,
Yes, yes.
other reporting responsibilities.
Very good. Yes, absolutely correct.
Sir,
So
in the audit report, the last paragraph in
yes,
the
absolutely
last
correct.
we will write it.
Yes, absolutely correct. In the last, there was a paragraph on the matters other reporting requirements and regulatory matters.
Yes, sir.
Over there, we discussed about that these are the matters under which under a law, the auditor is required to report. So basically, it could be section 143 in case of banks, and in case of other scenarios, it could be your other laws and regulations wherein the auditor is required to report. Let us see that now. Okay, and we will understand the reporting requirement under section 143.3 based on that reporting which is being done in your audit report. Again, I will request that please do not focus on the name of the company. It is being taken or it's available on the public data. Okay, here it is. Report on other legal and regulatory requirements. Basically, this deals with the section 143.3 requirements, reporting requirements. Okay. Now, what is the first 143.3 reporting requirement is whether the auditor has obtained all the information and explanation like which is best to his knowledge and belief which are necessary for the purpose of audit. Okay, so whether he has got or not, and if not, then the details that which he has not received. If you have received, then say that okay, you have received. Okay, so whether he has obtained sought and obtained all the information and explanation which is his as per his knowledge and belief that were necessary for the audit. So here, like the way we write is, we have sought and obtained all the information and explanation to which, to the best of our knowledge and belief, were necessary for the purpose of our audit. So we say that okay, we have sought and we have obtained also. When you have not obtained, then you need to specify what you have not obtained. Okay, and when you are not obtained, the details thereof means that okay, this is the particular information we have not obtained, and this is the effect of not getting the information on your financial statement. So this is how you are required to report for 143.1a. Even in the other matters also that we will see, wherever there is a comment that you need to provide, okay, whether you have received the information or whether there is any negative remark, you need to explain that negative remark in detail. It is not something that you can just leave, okay, we have not received. No, it is not a generic remark. Understand, when you are reporting under 143.3, they have to be specific with details. Clear? See, usually there are very few companies where you can identify a negative remark in this category. Very few. Like if there is a disclaimer of opinion, then only I would say, okay, I have not received that particular information. There also, it is kind of a scenario where otherwise there are very less scenarios where you can say that auditor will comment that they have not received the information. Clear? Okay, now let us see the next one. Just a minute, sorry. It got changed. Yeah. Okay. So next one. Now, in our opinion, whether proper books of account are as required by law have been kept by the company. Okay. And whether from the examinations of the examination done by the auditor, whether those books of accounts and and appropriate returns that have been received from the branches, okay, are adequate. So how it is written then is, in our opinion, proper books of account as required by the law have been kept by the company. So far it appears from our examination of those books of accounts. Basically, it deals about books of accounts, whether they have been kept appropriately. And second is getting returns, adequate returns for the purpose of audit from the branches not visited by him. If there is any branch where he has not visited, in that case, he needs to specify, okay, this was a branch, okay, where we have not visited, and accordingly, we have got the information. Kind of, you can say, SA 600 comes into the place of it, but I do not refer the auditor over here. Okay, I do not refer the auditor over here. The reason because the thing is that there could be multiple branches. Specifying the name of each and every auditor becomes difficult, or specifying the branch-wise detail becomes very difficult. So I'll show you one specific paragraph in one of the audit report where they have provided that, okay, we have received the reports, but subject to this particular item. So let us see. Over here, what they are saying is that in our opinion, proper books of accounts as required by the law relating to the preparation of the aforesaid consolidated financial statement have been kept so far, as it appears from our examination of those books of accounts and the report of other auditors, except for the matter stated in the paragraph this below on the reporting under Rule 11G of the Company's Audit and Auditors Rules 2014 as amended. Now, what is that particular reporting requirement under 25H4? I'll show you. Sorry, it's 25H6. Yeah. If you see, this is the one. Based on the examination, which include tax checks and that performed by the respective auditors of the subsidiaries and associates, which are the companies incorporated in India and whose financial statement have been audited by under the Act, except for the instances mentioned below in respect of the bank and its subsidiaries and associates. The bank, its subsidiaries and associates have used accounting softwares for maintaining books of accounts, and we will come to the audit log point, but they are specifying instances over here, okay, where they are saying that, auditor was not able to comment on a particular matter of books of accounts. So there is a point on the audit log and maintaining, information in a software with the audit log and audit trail. Now, as there was no audit log present, or there was some issues with the audit log, they are also linking that issue with the proper books of accounts, because having audit log or audit trail is part of having a books of accounts. Now, what they are saying is instances of inability of the auditor to comment on certain softwares in absence of service organization controls auditor report covering the audit trail requirement. Instances where the audit trail feature is neither or either not enabled, or features is enabled but not operated. Instances where audit trail has not been enabled at the database level to log any direct data changes for certain accounting softwares. Okay, so they are talking about that about the audit log, audit trail, which is again the part of your books of accounts. So not having an audit log or audit trail will also impact your books of accounts, and they are referring to that particular matter below. Okay, so this is how you can report when it comes to the proper books of accounts. Clear? Any doubts? Okay. Now, the third one is whether the report on the account of any branch office of the company, which is, audited under section subsection 8 by a person like who is the branch auditor, is sent to him or not. If it has been sent to him, then how he has dealt with that particular report. Means whenever there is a branch auditor who is a separate auditor than the statutory auditor, whether that branch auditor has sent the report to him or not of that particular branch audit, and how he has used that particular report. Okay. Now over here there was no branch, so you won't be seeing that particular point over here. But let's see another scenario where I could show you the branch audit. So basically, where these points are not applicable, at that point in time, they do not mention on this particular point. Okay. So here the branch is not applicable, so that's why they have not mentioned. Otherwise, if there was a branch, then in that case, the auditor is required to report on this particular matter. That whether the report on the accounts of any branch office of the company audited under subsection 8, that's by a branch auditor, has been sent to him under the provision, and if yes, then how he has dealt with it. Usually when it comes to the branch of a company, the auditor remains the same. There is no separate auditor. That's why there is no separate reporting requirement for this particular kind of provision of section 143.3. Okay. Any doubt till now? Any doubt with respect to ABC that we have discussed? So your point number 1 was all information that we discussed. Your point number 2 was proper books of accounts. Your point number 3 is branch audit reports. Now point number 4. Point number 4 is whether the company's balance sheet, profit and loss account are in agreement with the books of accounts or not. So whether the financial statements are prepared as per the books of accounts or not. Okay. So pretty much straightforward. There is nothing difficult over here in this particular point. Okay, no confusion. But the point here is the particular provision talks about the balance sheet and profit and loss account. But it has to be construed not only balance sheet or profit and loss account. It has to be construed that balance sheet, profit and loss account, other comprehensive income, statement of cash flow, and statement of changes in equity. So all the set of financial accounts, financial statements. If you see most of the auditors today, they do not restrict to the balance sheet or profit and loss account, but they go beyond balance sheet and profit and loss account, and they check all the financial statement, or they report on all the financial statements. So basically it goes like balance sheet, statement of profit and loss accounts, including other comprehensive income, statement of cash flow, statement of changes in equity, okay, are agreement with the books of account. Then comes the next point, which is whether in the opinion of the statutory auditor, whether financial statement comply with the accounting standards. Okay, now accounting standards are issued under section 133 of the Act of the Companies Act. It may be AS, it may be applicable in AS. So whatever accounting standards are applicable, whether they are being complied or not. If not complied, then auditor has to provide that okay, the accounting standard were not complied, and accordingly auditor has to report on the matter. Otherwise, you can say where it has complied, then at that point in time or in that particular scenario, auditor is not required to not required to report any specific standard by standard. Rather, a generic comment will go on. Like for example, here, in our opinion, the standalone financial statement comply with the Ind AS specified under section 133 of the Act. So I'll not go and repeat on standard basis, like okay, he has complied with this. Rather, a generic statement will do good for me. But when there is a non-compliance, at that point in time, I have to specify what is a non-compliance. Okay. Any doubt till now? Okay. Then the next part is whether, okay, is there any transaction within the company, or is there any matter that is there within the company based auditor is having opinion that for this particular matter, for this particular transaction, it is having adverse effect on the functioning of the company. Means any specific transaction, any specific matter that the auditor thinks that okay, no, this particular transaction, this particular matter has a negative or adverse effect on the functioning of the company. In that case, auditor has to bring that transaction on his report. He has to specify that detail. If there is no such transaction, then there is no need to report on this particular requirement. So if you see over here, there is no reporting done on this particular requirement. Okay, but if there is a negative transaction or any transaction which is having an adverse effect, then only you are required to report as an auditor. So observation or comments of the auditor on financial transactions or matters that have any adverse effect. So comment only when there is an adverse impact or effect. Comment only when there is adverse effect. Otherwise, you are not required to comment on this particular clause. Simple. Okay. So any adverse effect, then comment, otherwise not. Same way, when there is no branch report, then perfectly fine. You are not required to report. But if there is something, then only you need to report. Yes, Pooja.
So adverse effect on functioning of the company, can it be equivalent to having adverse effect on overall financial position?
Yes, functioning of the company means you have entered into a transaction which is kind of unfavorable for the company. For example, you have decided, or the company has entered into a transaction to sell the goods to a related party way below than the market value.
So in that case, it will form part of our qualified opinion or the basis for adverse opinion.
That depends upon the impact, how much adverse it is. See, here the term adverse is specified. The quantification, it's not like, okay, it has to be pervasive when it comes to the opinion. And adverse can be, a part of my qualification also. But
so even if that point is covered under qualification or basis for adverse opinion para, even then we have to again specify it here.
Yes, absolutely correct. You have to specify it here.
Okay, sir, clear.
The reason because if there is a matter that has an adverse impact, so not only you are when it comes to the reporting under qualified opinion paragraph, or when it comes to the reporting on the what do you say, in your audit report above opinion paragraphs. Over there, we more focus on the misstatement point of view. Okay, whether is there any misstatement or not, whether is there any fraudulent transaction or not. Sometimes there are transactions which are genuine. There is no misstatement in that, but still those transactions have adverse effect on the functioning of company. And they are of such a nature that you cannot avoid those transactions. For example, I will tell you, uh, let's say company is dealing with a particular vendor. Okay, they have entered into a 5 years contract. Now 5 years contracts requires a 5 years so in certain companies what happens is that you have to enter into a contract with the vendor for supply for the vendor has to supply you raw material. Only when you enter into a fixed contract with a fixed quantity, minimum quantity every year, means every year the vendor will supply you this much minimum quantity, then only there are certain markets where there is a monopoly of some raw material vendors. Over there you have to enter into a contract, and that contract can have an adverse effect on the functioning of the company. Okay, whether that will be covered by your opinion or qualified opinion paragraph, that is a different story that requires understanding of the whole matter, whether there is any misstatement or something like that. But if there is no misstatement, if the transaction is within the business transaction only, but still it has an adverse effect on the functioning of company, means adverse effect can be, you can say that okay, it has caused a lot of stress, financial stress on the company. Okay, company has to pay a lot of amount of cash to that vendor, and they have to take the loans, because of which the interest cost has gone high and company has started making losses. A financial decision which is not a misstatement but on the same time can have an adverse effect on the functioning of company. So you might not qualify your audit report, but you report it over here. Are you is your doubt clear?
Yes, sir, clear.
Any further doubts? No? Okay. So that was with respect to the functioning of the company and any adverse effect of the functioning of the company. Now coming to the next point. The next point here talks about with respect to disqualification of directors. Can anyone tell me which is the section which deals with the disqualification of directors? If you have gone through the company checks already now, which is that section which deals with the disqualification of directors? Anyone? Disqualification of directors under Companies Act. Which is that?
164.
Yes, absolutely correct. 164. So if there is a director who is disqualified under section 154, okay, and that is to be preside under subsection 2, which talks about, if you see the subsection 2 of section 164, it talks about specific scenario where, okay, a director of a company, now if that company has not filed the financial statement or annual returns for a continuous period of 3 years, 3 financial years, or they have failed to repay the deposits accepted by them or interest on them, or they have failed to redeem any debentures, or failed to pay interest on them, or failed to pay any dividend which has been declared by the company for more than 1 year, then that particular director becomes disqualified under section 164 subsection 2. Now, as an auditor, we are required to check whether any director is disqualified from being appointed as a director under section 164 subsection 2 or not. What we do is, number one, we take declarations from the director. Number two, we check whether this particular director is a director in any other company. Over there, is there any, something which is available on the public domain which can lead us to believe that yes, this director is disqualified? Okay. So there are two ways we check is, number one, written representations that we obtain or the declaration that we obtain from directors, or number two, information that is available in the public domain. Based on that, we can identify whether any director is disqualified or not. And how we write in our audit report? We write it that on the basis of the written representations received from the directors as on 31st March 2024, taken on record by the board of directors, okay, none of the directors is disqualified as on 31st March 2024 from being appointed as a director in terms of section 164 subsection 2. Okay. So by this way, we verify whether any director is disqualified or not. Clear? Now the next point is with respect to the adverse remarks relating to the maintenance of accounts or other matters. So if auditor has any adverse remarks with respect to maintenance of accounts or any other matters connected to that, auditor has to specify that adverse remark in that particular section. Okay. But usually if you see any adverse remark or any reservation relating to the maintenance of accounts or any qualification is the same that you have a qualification in your audit report. So there are high chances that these qualifications will get repeated. Means whatever you have written in your qualified opinion will come down here also. So your qualified opinion, basis of qualified opinion and the matter to be reported under clause H of subsection 3 will be the same. You can provide a reference to subsection to your basis of qualified opinion when it comes to this particular clause H. Okay. Now, coming to clause I, very important. Whether the company has adequate internal financial controls with respect to financials, with reference to financial statement in place, and the operating effectiveness of such controls. So this is known as the IFC, where auditor has to report on the internal financial controls with reference to financial statement, okay, and their operating effectiveness of such controls. This can be done when you have actually in-scoped the control testing, the design and the operating effectiveness. So where this particular point is applicable, over there you have to compulsory test the controls, okay, not only the operating effectiveness but the design, so that you can comment whether they are in place and whether they are operating effectively or not. Now the question comes is it applicable to all of the scenarios? Is it applicable to all the companies? Then the answer is no, this is not applicable to all the companies. This is applicable to selected companies. Can anyone tell me what is the exemption over here, or which are the companies to which this particular requirement is not applicable? Anyone? Which is that what is the requirement of exception for the reporting on internal financial controls? Come on, guys. No? Okay. So usually this particular requirement of reporting with respect to internal financial control is not applicable to certain classes of companies. Number one, it is not applicable to one person or small company. Number two, it is not applicable to a private limited company which has a turnover less than 50 crores and which has aggregate borrowings from banks or financial institutions at any point in time less than 25 crores. So 50-25 ratio is going on. Okay. If the company has a turnover less than 50 crores, and if the company has the borrowings less than 25 crores, then in that case, this particular requirement will not be applicable. That is only to a private limited company. Plus 1% in small company, they both are also exempted. Clear? So just to clarify once again, private company, which 1% company, small company, private company, which has a turnover less than 50 crores as per the latest audited financial statement, borrowings less than 25 crores. Always remember, this is a 50-25 ratio. For private limited, 50-25 ratio. That is the turnover borrowing ratio. Okay. Turnover less than 50. And the condition is and. Remember that. It is and, not or. It is and. So you have to satisfy both 50-25. 50 turnover, borrowings 25. At borrowings, that is at any point of time during the financial year. At any point in time. So that is very important part. It is not talking about the previous financial year. It is talking about during the current period for which you are checking. If there was, borrowings more than 25 CR, then you lose the exemption. If the turnover, as per the last audited, now turnover goes to the last audited. Okay. If the turnover is more than 50, then you lose the exemption. You have to satisfy both of the scenarios, both of the conditions to get the exemption of a private limited company. Or else you go for a small company exemption. What is small company exemption? What is small company exemption, guys? Okay, tell me what is the criteria for being a small company? Anyone?
तो जिसका पेड अप कैपिटल 4 करोड़ से ज्यादा नहीं है, या तो फिर कोई स्पेसिफाइड अमाउंट दैट कैन बी 10 करोड़ हायर अमाउंट स्पेसिफाइड.
Okay, yes. Any other requirement for small company?
तो टर्नओवर का भी है, मतलब दो कंडीशंस है फॉर वन पेड अप कैपिटल. अगर हम देख रहे हैं तो नॉट एक्सीडिंग 4 करोड़ एंड टर्नओवर फॉर 40 करोड़ एंड 100 करोड़.
Yes, very good, very good. So when we talk about a small company, okay, we are talking about paid up capital and turnover conditions for a small company. That is 4 and 40. So paid up capital shall not exceed 4 crores and turnover shall not exceed 40 crores. Okay. So if that is a scenario, in that case, that particular company will be called as a small company. Now, when I talk about turnover, it is for the immediately preceding financial year. Again, the way we are checking over here, in that case also we are checking the immediately preceding financial year, the turnover of 40 crores and paid up share capital of 4 crores. These two conditions are there for the small company. So the small company ratio is 4 and 40. That is paid up share capital and your turnover. 440 and 50-25 or 25-50, whatever the way you want to structure. So these are the two conditions that you remember, that for these kind of companies, section 143 subsection 3 clause I, which is in respect to the internal financial control, is not applicable. Clear? Any doubt? Section 285. Okay. Section 285 discuss the definition of the small company, which talks about this particular conditions. Any doubt till now? Any doubt? Okay. If no doubts, then how do we report? Let's say, for example, it is applicable to the company. Hypothetical example as of now, applicable to the company. How will you report on this? Has anyone seen reporting on this particular clause? Have you seen how do we report on the internal financial controls? Anyone? Okay, I'll tell you. Don't worry. So when it comes to reporting on internal financial control, it's not only a clause, not only a particular, item that we report, but there is a whole annexure attached to it. So how do we report is, we say that with respect to the adequacy of the internal financial control, with reference to the standalone financial statement of the company, and the operating effectiveness of such control, refer the separate report in Annexure A. We provide a separate report in Annexure A. And we provide here, that is our report express an unmodified opinion on the adequacy and operating effectiveness of the company's internal financial control with reference to the standalone financial statement. Okay. So we specify our unmodified opinion over here. We specify that there is a separate report in Annexure A. And we issue a separate report under Annexure A. That is the report on the internal financial controls with reference to standalone financial statement under Clause I. Again, if you see the structure of this particular report, how it is there, you have management responsibility, then you have auditor's responsibility, then you have meaning of the internal financial control with reference to the financial statements. Okay. Then you have inherent limitations that you specify and then you give the opinion. So this is how your report is structured basically. Now, there is one important piece of literature or one important piece of, guidelines you can say, that is the guidance note issued by the ICAI over the internal financial controls, reporting on the internal financial control. This guidance note provides the detail how to perform, how to perform audit in case of Clause I. That how to perform audit with respect to the internal financial control with reference to the financial statements. Very important, that is mandatory, that is required to be complied with. I would suggest everyone to please read that guidance note. Okay, that guidance note is very detailed. It specifies a lot of things. It specifies that, okay, what each and everything is specified in that particular guidance note. With respect to the, internal financial controls, how the reporting is required to be done, technical guidance on planning of the audit, roles of risk assessment, selecting the controls to test, then multiple locations, a lot of things are there in that particular guidance note. I would request everyone to please at least see that guidance note once. Okay, that will give you a good level of understanding about this particular testing, this particular reporting, because it is a separate you can say it is altogether a separate kind of reporting requirement within the company set, where we are issuing a different report. Okay, what is the reporting requirement when it comes to modified opinion? How do you issue a modified opinion? When you identify, what is a modified opinion when it comes to the internal financial control? A lot of aspects are there, okay, that I would recommend everyone to read. But as of now, just understand that we have to issue a separate report for reporting on internal financial controls with reference to financial statements, and we have to specify the opinion that we are issuing. Clear? Any doubt with respect to this?
Sir,
Yes.
the operating effectiveness which we are required to report upon, is it really related to the operating effectiveness throughout the year or as at a particular date of balance sheet?
No. So when I'm talking about operating effectiveness, we are talking about operating effectiveness throughout the year, not a particular date.
Okay, sir.
Because it is basically, you cannot comment, it is, it is not feasible to comment when it comes to the operating effectiveness of a control on a particular date. See, what is operating effectiveness? Whether the control was operating in that particular period or for that particular period appropriately or not. If I talk about operating effectiveness as on date, okay, what will be the scenario is I'm considering either limited set of transactions which are there on that particular date, or I'm not considering any of the impact of that control being non-operative before or after that date. Let's say, for example, I'm talking about operating effectiveness as on 31st March. That means if I say yes, it was operating effectively as on 31st March, it can be construed that it was not operating, or it might have not been operating as on 30th January. So if I say operating effectiveness, it has to be taken for the whole period rather than on a particular date.
So, if during the period of audit, auditor is coming to the point that where he is identifying that there is some deficiencies in internal financial controls, and which weaknesses of which was not corrected by the management till the balance sheet date. तो इस जगह के अलावा कोई और जगह भी रिपोर्टिंग में ये चीज हाईलाइट होगी क्या, जिससे हम यूजर्स का अटेंशन वहां पे ड्रॉ करें?
Yes, there will be. For example, if there are, see, internal, not you can say ineffective internal controls are, have two big consequences. Number one, it will increase your testing, substantive testing. Okay, so it may happen that if the controls are not operating effectively, there could be a lot of misstatements. So again, it will impact your basis of qualified opinion or adverse opinion, whatever scenario it is. Let's say even after not having an effective control environment, there is no misstatement. That becomes your key audit matter, because over there you have encountered significant difficulties, and this is how you tested and you did not identify any observation. You can say that, okay, this becomes part of my key audit matter because one, it was communicated because of significant matters. Second, we encountered a significant difficulty over here. So either if there is a misstatement, you can bring it to the basis of qualified opinion or adverse opinion. If there is no misstatement, controls operating not effectively, a lot of issues are there, but still there is no misstatement, somehow you can go for the key audit matters. But usually it doesn't happen. Like, if there is a, you can say, controls not operating effectively, in that case, there are high chances of having misstatement.
Yes, sir.
Plus, there is a reporting requirement to those charged with governance. Can you tell me which there is a reporting requirement to those charged with governance for significant deficiencies and control deficiencies? Can anyone tell me where this is there?
SA 265.
Yes, absolutely. So there also you need to report. Any doubt till now? Any doubt? Okay, let's read this particular annexure A so that we can have a good understanding quickly. Okay, so We have audited the IFC with reference to the standalone financial statement of particular company, which includes joint operations as that this is in conjunction with this and this for the year ended on that particular date. The company's management is responsible for establishing and maintaining IFC based on the internal control with reference to standalone financial statement criteria established by the company and considering the essential components of the internal control stated in the guidance note. Okay. Components of internal control, which were there? Anyone? Components of internal control?
5 components.
Yes, 5 components. So whenever we are referring that the internal controls were established by the company considering the essential control components. So components were considered when they were drafting, when they were framing their internal financial controls. These responsibilities includes design, implementation, maintenance of IFC that were operating effectively for ensuring orderly and efficient conduct of its business, including safeguarding of asset, prevention and detection of fraud, accuracy and completeness of the accounting records, and timely preparation of reliable financial information. Now, auditor's responsibility. What is auditor's responsibility? That is to express opinion on the company's IFC, okay, based on the audit. Audit is conducted with respect to the guidance note and standards of auditing issued under 143(10) of the Act. Now, this standard and the guidance note requires auditor to obtain reasonable assurance whether the controls or IFC was established and maintained and operating effectively in all material respect or not. Now, remember one thing. If you see over here, we are talking about the term in all material respect. We have also discussed this particular term somewhere else also. When this term comes into use, why I have not written true and fair view? There is no true and fair view. Why? Anyone?
So can you repeat your question?
So I am using the term, I am using the wordings in all material respect instead of true and fair view.
So because it is about controls efficiency, that's why we are using that word in material respect.
Basically, it is about the compliance framework. So here we are talking about compliance framework, not the fair presentation framework. Here, the reporting requirement is based on the compliance framework. That's why we are using the terminology that is all material respect. Okay. Then, again, they have specified their responsibility with respect to the performing procedures to obtain audit evidence. Okay, which includes assessing the risk that is a material weakness exists, testing and evaluating the design and operating effectiveness. Okay. Then procedures are based on auditor's judgment. So again, that similar kind of thing that we have already seen in the audit, but with respect to the internal financial controls. And we believe that the audit evidence that we have obtained is sufficient and appropriate to provide basis for the audit opinion on the company's IFC. So again, something similar we have seen in the audit report. Meaning of IFC, they have specified what is IFC. Okay, that is internal financial control is a process designed to provide reasonable assurance regarding the reliability of the financial reporting and the preparation of financial statement for external purpose in accordance with the generally accepted principles. So they are talking about what is IFC with respect to standalone financial statement. They are talking about that it is not, they are talking about, okay, controls throughout the organization for each and every process, but they're talking about IFC, internal financial control, with reference to the financial statements. What is that? What is the difference between the other controls, which may be on the other process, but which can be not a financial control. They can be operating controls also. But here they are only specifically talking about internal financial controls. Okay, so there could be multiple types of controls, your operating controls, your IT controls, but here specific references of the internal financial control. Even your requirement under clause I is on internal financial control, not on the other type of controls. Okay. So with respect to maintenance of records, reasonable detail, accurately and fairly reflecting the transactions and the disposition of asset. So all that stuff they are specifying over here. That provides reasonable assurance that the transactions are recorded as necessary to permit preparation of the financial statements, that the receipts and expenditures of the company are being made only in accordance with the authorizations. They provide reasonable assurance regarding the prevention and timely detection of unauthorized acquisition, disposition of the company's asset that could have a material impact on the financial statements. Okay, so they are specifying the meaning of internal financial controls. And then inherent limitation and the opinion. What is the inherent limitation? Management override of control is the biggest inherent limitation. Remember that. Inherent limitation, when it comes to the inherent limitation, management override of control, where we have discussed this one.
Fraud.
Which essay?
It's a 240.
Yes. So management override of control, collusion, or because of these kind of scenarios, there could be an inherent limitation that you are not able to detect or identify the controls which are not operating effectively, or the controls are not able to detect the fraud on a timely manner. Okay, so that is they are highlighting over here, and then they are giving their opinion that best in our opinion and best to the information and according to the explanation given to us, the company in all material respects has adequate internal financial control with reference to the standalone financial statement. Okay, so that is your opinion over here. Now this was annexure A. Now let's go back to point number I. Oh, sorry. Yes, clause I, but here it is F because you have two clauses where you do not report. That's why the numberings can go here and there in the audit report. But as per the section, it is clause I. If you see over here also the heading, it says 143 clause I subsection 3. Okay. Clear with this? Any doubts with respect to the internal financial controls with reference to standalone financial statements? Anyone? Any doubts?
No, sir.
Okay. Now these are the matters which are specified under 143.3, and there is one point, clause J, which talks about as such matters as may be prescribed. Okay, so there are other matters also which are not enumerated under section 143.3, but they are enumerated from somewhere else, and that is your rule 11. So rule 11 also specifies that there are also specified additional matters where the auditor has to report. Now, what is this rule 11? Rule 11 of Companies Audit and Auditors Rule 2014 lists down certain matters where auditor has to report. Okay, about which auditor has to report. So there are total, you can say 7 matters, or kind of that arrange. Let us see what are those matters. So your clause J talks about rule 11. Rule 11 of the Company's Auditor and Auditors Audit and Auditors Rule 2014 that prescribes additional matters on which auditor has to report. The first one is whether the company has disclosed the impact of pending litigations on financial position. So if we go back to the audit report, if we see over here, yeah, rule 11. We'll come to this 197.16 later on, but let's see with respect to the rule 11 first. So whether the company has disclosed the impact of pending litigation. So if you see, they are in the company has disclosed the impact of pending litigation on its financial position in standalone financial statement, and they have provided the reference of that. Refer note number 36. Okay. So first one is pending litigation. Second one is whether the company has made provision, okay, for material foreseeable losses on any long-term contracts, including derivative contracts. So the companies which are included or which are dealing into a type of a business where they are required to enter into a long-term contracts for development of a site, for development of a project, or turnkey projects or something like that. If there is a material foreseeable losses, we call it ordinance contract, or the contract where the cost is going to exceed the revenue that we are expecting. The expected cost is going to be more than the revenue that we are expecting. In that case, whether the company has made provision for such kind of contracts. So if you see how we report is, the company has made provisions as required under the applicable law or the accounting standard for the material foreseeable losses, if any, on the long-term contracts including the derivative contracts. Now, remember one thing. What we are reporting over is for material foreseeable losses, not all foreseeable losses. There's a difference between both. So this particular term is material, not all. Okay. If the losses, foreseeable losses, are not material and company has not done any provision, first of all, if that is not material, okay, let's say I call it as a misstatement. Okay, the provisions were not made, but it is not material. Will you qualify your opinion? So there are missing provisions, but not material. Will you qualify your opinion? Yes or no? I would not qualify. Reason because it is not material itself. So for me, the requirement of a qualification goes for like if any material misstatement is there. If that is not material, then why I will qualify? If I, number one, it is not going to be part of my qualifications. Number two, here also under rule 11, it is talking about only material foreseeable losses. If there is any miss by the company on the provisions which is not material, again, it is not mandatory to report, but you can report if you want, but it is not mandatory to report over here because that is not a material. Now, what is material? You need to apply your standards to understand the materiality concept. Clear? Any doubt? Okay. Third is whether there has been delay in transferring the amounts to the investor education and protection fund. Okay. So if there is any delay, then the details of the same. So if you see the reporting over here, there has been no delay in transferring the amounts required to be transferred to the investor education and protection fund by the company, except for an amount of 2 CR which are held in abeyance due to pending legal cases. So if there is any amount which is still not transferred, you need to provide the details for that particular amount and the reason why it has not been transferred. Clear? Any doubt? No? Okay. Now, point number your E, that is fourth clause under Rule 11, okay, is very important. Now it contains three sub clauses which we need to discuss. But what I prefer is, if you don't have any doubts, let's take a break, try to grasp whatever we have discussed, and after the break, we'll discuss these three important clauses, sub clauses, because this requires understanding of the transaction, that what is the requirement of these sub clauses. Okay, let's take a quick 10-minute break. Ashok ji, thank you. session. Now, coming to the very important part that I was discussing about, that is your subclause 4. You can say that there are three reporting requirements under that. Okay. Now, what are those reporting requirements? So basically, your rule 11 specifies multiple items, and you can say sub rule 4 or subclause 4 of that particular rule. What is the requirement here is, here we are required to report about certain kind of transactions. Okay, remember, we are required to report upon certain kind of transactions. Now, first, let's have a plain reading of what is required, and then we will interpret what that transaction is. So the plain reading is whether the management has represented that. So here, first parameter of this particular reporting requirement is we have to obtain a representation from the management. Okay, so we have to obtain representation from management. That is the first point that we need to understand. And then what this representation is about. This representation is about that other than disclose in the notes of accounts. So something which is already disclosed, fine, exclude that. But other than that disclosed, like if it is not been disclosed in the notes to account, no funds have been advanced or loaned or invested, okay, by the company. Okay, so company has not given any loan or advance or has not invested any of the amount, either that is from the borrowed funds or any other sources kind of fund. Okay, or the company has not invested or given to other person, entity, including foreign entities. So these are known as the intermediaries. So the first step is company giving funds to intermediaries. Okay. Now these funds can be from borrowed, can be from any other source. Perfectly fine. But these funds, like if any fund has been given by the company to other person, like other person, who is that other person? That entity can be there, other person can be there, including foreign entities. Together, they are known as the intermediaries. With the understanding, whether recorded in writing or otherwise, that intermediary shall directly, indirectly lend, invest in other persons or entities identified in the manner by on behalf of the company. Okay, who are known as the ultimate beneficiaries, means with an instruction to those intermediaries that please invest or lend this amount to someone else that the company is providing or the company is saying. So these funds then will go to ultimate beneficiaries. Okay, with an instruction. So this instruction of lending is something which is coming from your company. This instruction of lending is something which is coming from your company, and they are lending the same amount or same funds that were received from the company. Okay, or provide any guarantee, security on behalf of ultimate beneficiaries. So whether you lend, you provide a guarantee or security for which the company is giving you funds. Okay, so here whether you have to report as an auditor whether the company has entered into in such type of transaction. So the concept here is to report whether is there any such kind of transaction or not. Okay, there should not be any transaction other than reported in the balance sheet. So you need to identify, or you need to take a representation from the management. Management, give me a representation that if there is such kind of transaction, then you have reported that transaction in the balance sheet. Otherwise, there is no such transaction which is not reported in the balance sheet, and still you have this kind of transaction. So there should not be transaction outside the balance sheet or outside the reporting or disclosed in the notes. Transaction outside the notes. There should be no transaction outside the notes of accounts. Everything should be disclosed. If not disclosed, take a representation from the management. You have not missed any of the transaction or any of the such transaction to report in your notes to accounts. Means you have reported all the transactions, such nature of transactions in your notes to accounts. Clear? That is the first one. Second, whether the management has represented. Again, we will take a representation from management. Okay. Again, the requirement goes for the representation from the management. Written representation from management. Okay. Now, what we are taking as a written representation, that no funds have been received by the company from any person, entities, including foreign entities. They are known as a funding party. So funding party has not given any funds to the company. So there is a funding party that is providing funds to company. Okay. With the understanding, whether in record, in writing, or otherwise, that the company shall, okay, directly, indirectly, lend or invest in other persons. Okay. On behalf of the funding party, which are known as the ultimate beneficiaries. Now here again, the instruction is that to invest or lend to ultimate beneficiaries. Now these funds will now go to ultimate beneficiaries on the instruction of the funding party. So the instruction to lend is again now coming from the funding party. And these funds are now flowing to ultimate beneficiary through the company. Okay. The change compared to the clause 1 is, or the point number 1 is, company was the funding party in the first case. And in second case, company has changed their place to the intermediaries. Now, what the second point says is whether company is an intermediary or acting as an intermediary. Same transaction, but company acting instead of funding party. Now, company is coming to the second position and acting as an intermediary and passing the funds to someone else. Is this kind of scenario available, which is again not recorded in the notes to accounts? Means if this kind of transaction is there, then that must have been recorded in your notes to accounts. And you need to obtain a representation from the management. Management confirm me that there is no such transaction which you have not disclosed in your notes to account. Okay, this kind of structured transaction. Clear? So point number 1 and point number 2, only the company is changing the position. Transaction is kind of similar. It can be multiple, hierarchies. It can be multiple other things, because it says that directly or indirectly. It is not something, directly they have to provide, directly or indirectly. Okay. So if they are getting funds directly, indirectly, they are passing funds directly, indirectly, which is not recorded in the notes to account, then in that case, that is not allowed. Basically, first of all, then you need to take a representation from the management that management has disclosed everything. Now, number three talks about that based on the audit procedures, means the auditor has to perform certain procedures. Here, this means that auditor has to perform certain procedures. Now, procedures regarding what? Procedures regarding to identify that nothing has come to their notice that caused them to believe that the representations in 1 and 2 contain any material misstatement. Means, based on your procedures, do you think the representations which are given over here that the company is not an intermediary unless disclosed in the notes to accounts, or company is not a funding party unless disclosed in the notes to accounts, is incorrect? So do you have a doubt on the representation that is provided by the management? Do you have any identified any misstatement in the representation provided by the management? First 2 points, whether you obtained the representation. Third number point, whether do you feel that there is any misstatement, or do you feel that the representation provided under 1 or 2 are not correct? So these are the 3 important points where the auditor is required to report. Plus, auditor is required to perform audit procedures to validate these representations. It's not like that you need to only obtain the representation, but you have to validate the representations by performing the audit procedures. Clear? Any doubt with respect to these 3 points? Very important, because this is a specific structure of the transaction where you need to report, and for that you need to perform some procedures. Any doubt? No? Clear? Okay. So when you will have your reading, you will come to know what that particular clause actually it is worded in a way that it should cover everything, every such kind of permutation, combination of such nature of transaction. Okay. So the clauses are worded to include every permutation combination in such kind of transactions. So that's why they are quite a big when you read, but the content and the intent of that particular clause is to identify these kind of reportings which are not there in your financial statement. Okay. Now, coming to the next one is about the dividend. Whether the dividend declared or paid during the year by the company is in compliance with section 123 of the Companies Act. Now, let us see this point from the audit report itself. So, the final dividend proposed for the previous year, declared and paid by the company during the year, is in accordance with the section 123 of the Companies Act. So, whether the dividends is as per section 123, if yes, then you need to report yes. Okay. Then the next point and the last point is on your audit trail. Okay. Very important point that we have seen before also about the audit trail. So what audit trail point is about? Okay. Audit trail point, if you see, the requirement is that from 1st April 2022, each and every company has to use accounting softwares. Okay. If the company is using accounting softwares for maintaining its books of accounts, then that software should have a feature of recording audit trail, edit log. Okay. And the same should have been operated throughout the year for all the transactions recorded in the software, and the audit trail, the auditor has to verify whether the audit trail feature has not been tampered with, means it was not closed in between, it was not discontinued in between, it was not something some tampering has not been done with that feature, and it is the audit trail for each and every transaction has been preserved by the company. So Let's go back to one of our audit report where we had this kind of, observation on the audit trail. This one. Now, if you see what it says that here they are talking, we read this particular clause earlier also, but here specifically they are identifying instances that where this audit trail feature was not there, or it was not operating, or they could not verify the edit log or audit trail. So what they are saying is instances of the inability of the auditor to comment on certain software in the absence of service organization controls auditor report covering the audit trail requirement. Means there was a software, okay, which was used by the service organization. Now the auditor is not able to comment because there is no service organization controls auditor report covering the audit trail. So coming back to this particular part, under which particular standard we discussed about relying on the service organization's control? Anyone?
SA 402.
Yes.
Sir, SA 402.
And there was a specific term to these controls. What is we were saying about? Like, when we rely upon the controls of the service organization, okay, what was the requirement for that? Like what auditor is required to do for those controls? Anyone? Let's say yes. Yes, go ahead.
So I was saying, can you just repeat your question?
Yeah. So I was saying that let's say I'm relying as an auditor, okay, of the user entity. I have to rely upon the controls which are there at the service organization. What I should do for that? What was my role? Or what audit evidence I can obtain to rely upon the controls which are there at the service organization?
Type to report.
Sir, obtain type 1 or type 2 report.
Yes, very good. So type 1 or type 2 report. Again, type 1 report with respect to the design and type 2 report with respect to the operating effectiveness. Like it includes type 1 plus the operating effectiveness. So if, remember there was one of the point of your type 1 and type 2 report, whether that report is adequate for you or not. Obtaining type 1 and type 2 report is perfectly fine. We should obtain like if required. But the adequacy of that report, whether that report gives you the detail that you require or not. For example, remember we discussed one of the criteria that, okay, what if the auditor of the service organization only tested one sample for each control? Do you think it is sufficient testing done to provide that report? Under which standard those reports were issued? Remember something? Yes, no?
Yes, sir.
Now, again, that point is being repeated over here. So, the service organization's auditor's report does not cover the control around the audit trail. Hence, the auditor is not able to comment on that part. That's why he has identified as an exception to the reporting requirement on the audit trail feature. So type 2 report, he obtained the type 2 report, but that did not cover audit trail because on that particular part, see, I could say, okay, I have obtained the type 2 report, I'm done with the service organization. Answer is no. At the end, you have to understand whether the type 2 or type 1 report, what you have obtained, is giving you the required audit evidence or not. Here, it was not giving. That's why there isn't qualification or observation, you can say, on this particular point. Second was instances where the audit trail feature is either not enabled or the feature is enabled but operated from some applications for part of the year, means not operated throughout the year. The requirement is pretty much clear that it should have been operated throughout the year for all the transactions. If not, then you need to report. And third one, instances where audit trail has not been enabled at the database level to log any direct data changes for certain accounting softwares. So see, this audit trail feature, when it comes to a big IT environment or an environment where there are a lot of IT applications, it's not only accounting software or the software where the entries are done. It is, when I say accounting software, okay, if you see the wordings of the law of section of rule 11, okay, what it says that when the company has used accounting software for maintaining books of accounts, then whether such accounting software has a feature. Now the term accounting software will not only include your front end application but will include your back end application, the database is connected to with that application, the data which is stored, or any other ancillary or any supplementary application that is used to run that accounting software. So for all those things, wherever you have a transaction reported, wherever you have a data, accounting data reported or stored, or wherever you record accounting data, over there this feature should be there. Clear with respect to the requirements of audit trail or edit log, and how it is required to be reported? Yes, no? Okay.
Sir,
Yes.
can you please explain again the edit log once again?
Okay. Now, what is edit log? Basically, it is pretty simple. Edit log means if you post a transaction, a history of the transaction, that okay, this was created by this person. If someone edits that particular transaction, then the history that this person edited this transaction. So before editing, the transaction used to look like this. Let's say, for example, I went and I changed the amount. So earlier there was a book expense that was booked for 10,000. I went in that particular expense booking, I changed it to, let's say, 1 lakh rupees. So a log that okay, this was created for 10,000 by this person, this user, then this user changed that amount to 10,000 to 1 lakh. That is an edit log. A log, a list providing what edits were made to a particular transaction.
देन सर यानी ये जो फीचर है एडिट लॉग का, इसके अंदर जो भी पर्सन एक्सेस करता है वो अपने यानी पूरी डिटेल के साथ में एक्सेस करता है, तभी तो वो यानी रिकॉर्ड कर पाएगा ना?
Yes. So in most of the accounting software, you cannot log in unless and until you have your own login ID passwords.
Yes, sir.
So once you log in through your login ID password, once you make any change, and then that change goes into effect after the approval. Even sometimes, like in most of the cases, what happens is that this edit log also tells you who approved the transaction. So you have a control around the transactions that they should not be processed unless and until they are approved. So edit log feature does not only talks about posting of the transaction, but they talk about approval of the transaction, whether the transaction was approved by someone. If yes, then the preservation of that, okay, who approved the transaction, who approved the change to the transaction. So all those stuff, all that log, when it comes, it is the audit log or audit trail, you say.
Yes, sir. Clear. Thank you, sir.
Any further doubts? Any further doubts, guys?
सर एक बात और पूछना था। जैसे कि अभी अपने ने डिविडेंड डिक्लेरेशन के बारे में पढ़ा,
हाँ,
तो अगर कंपनी ने डिविडेंड डिक्लेयर नहीं किया है या फिर डिविडेंड डिक्लेयर भी नहीं किया है, पे भी नहीं किया है, ऐसा कुछ हुआ ही नहीं है, तब भी हमें ये क्लॉज जो है वो ऑडिट रिपोर्ट में मेंशन करना ही है?
okay.
यानी जो भी क्लॉजेस रहते हैं वो मैंडेटरीली ऑडिट रिपोर्ट में मेंशन करना होता है?
Not necessary. If there is nothing to report, then you need to specify there is nothing to report. So for example, I'll show you one example. Now dividend declared. So here if you see, the company has not declared or paid any dividend during the year. That's it, done.
हाँ, यानी कि शो करना रहता है ऐसा.
Yes. So there are certain clauses where if there is no issue, then you are not required to report. And there are only 2 such clauses. Otherwise, every clause you have to report. So for example, number 1 is this one. Whether reports on branch. Okay. This one is something if you have, then report, otherwise not. Most of the auditors, what they do is they report this also. They do not skip it. Okay. But this one, that observation or comments having any adverse effect, this is something comes only and only when you have an adverse effect. Otherwise, you do not write this particular clause or you do not report on this particular clause. Second one is your any qualifications or any reservations or adverse remark. This one. So this is also when you have any negative comment, any qualification, then only the reporting under this clause happens. Otherwise, you do not report anything. Otherwise, for each and every clause you write, you provide the details.
Okay, sir. Clear, sir. Thank you.
Yep. Any other doubts? Okay. If no doubts, there is one more reporting requirement. Okay. There is one more reporting requirement where auditor is required to report. See this one. I, as of now, specifically left this for discussion, but I'll take it up. Now, this reporting requirements comes from section 197. Okay. What is 197 of Companies Act? Anyone? What is
Sir,
197?
managerial remuneration.
Yes, absolutely correct. Managerial remuneration. Now, there is a requirement under section 197, subsection 16, that talks about that auditor in his report under section 143 is required to provide whether the remuneration paid by the company, okay, to the directors is in accordance, whether that is in accordance with this particular section or not. So when there is a remuneration paid to directors, then that remuneration is according to section 197 or not. Or if it is more than that limit or in excess of the limit of that limit which is prescribed under section 197, then the auditor is required to give details of that excess. So 2 things. One, when the remuneration is given to the directors, whether that remuneration is within the limits as per 197. If yes, then provide that okay, it is within the limits. If it is beyond the limits, excess of the limits, then provide the details, how, like what was in excess of the limits and how it is. Okay, so let's read the reporting under that particular clause. With respect to the other matters to be included in the auditor report, in accordance with the requirement of 197(16) of the Act, okay, as amended, in our opinion and to the best of our information and according to the explanation given to us, the remuneration paid by the company to its director during the year is accordance with the provisions of section 197, read with the schedule 5 of the Act. Okay, so whether the remuneration is within the limits, that is section 197 and schedule 5 together, they decide the limit and you need to provide whether that is within the limit or not. Okay, so that was your one additional reporting requirement which is beyond, which is outside section 143, but it is in some other section, but the reference is there. When you will read subsection 16, it says that auditor is required to report under section 143. Means he is required to report under his audit report. Okay, so this is a new reporting requirement which has been there. Any doubt till now? Any doubt with respect to the other legal and regulatory reporting requirements that we have discussed till now?
सर यहाँ पर ये जो अभी अपने ने पढ़ा 197 से रिलेटेड, इसे
Yes.
क्लॉज जी दिया गया इस रिपोर्ट में,
हाँ.
है ना, बट अपना जो 143(3) है उसमें जो क्लॉज जी है वो डिस्क्वालिफिकेशन।
No. That's why I'm saying do not go with this particular numbering over here. Reason because this numbering and your clause numbering will never match. The reason is that remember there are 2 points which I showed you that okay, these 2 points are not reported when you don't have anything.
यस सर।
That's why there will be numbering and everything will go up and down. So you do not correlate with the clause numbering and with this point numbering. This will be different.
ओके, तो यहाँ पे ये भी क्लियर हो गया मेरा। एक्चुअली मैंने वहां पे ये सोचा कि अगर उसको स्किप करेंगे तो बी के बाद डायरेक्टली डी आएगा, अगर
No.
B को हम नहीं करेंगे तो।
Yeah, you can go. This is a series. This is not a clause number. This is not a reference to a clause number. These are the bullet points. So perfectly fine. You can like go with. So in some audit report, I have seen instead of ABCD, they use 1, 2, 3, 4. Perfectly fine.
यस सर, थैंक यू, ये भी क्लियर हुआ। थैंक यू।
Yeah. Any doubts? Again, I'm asking again and again. Any doubts with any of the point? No? Okay. If no doubts, then next point that I want to discuss is reporting, very important reporting part. Okay. Now this reporting requirement again is not applicable in all of the cases. It is applicable in selective cases. Okay. And as an auditor, sorry, as an auditor, this particular reporting requirement is with respect to section 143 subsection 12, reporting of frauds. Okay. Can anyone tell me when the reporting requirement comes into the place of section 143 subsection 12, fraudulent reporting, when it is required to be reported?
So when the fraud is amount is above rupees 1 crore.
Yes, very good. So when you have a fraud of rupees 1 crore or more, over there, this particular reporting requirement comes. Now there are multiple questions that we need to understand when it comes to the amount wise. Okay. And let's read the section also, so that there are certain other points that we will get understanding about. So it is there on your page number 7.62 in your study material. Okay, 7.62 in your study material. Over there, this point is given. Duty to report frauds. Point number 5. Okay. Now what it says? Subsection 12 of section 143 deals with if the auditor of the company in the course of performance. Now each and every word holds its importance. Each and every word has its importance in this particular reporting part. So what it says that if an auditor of the company, we are placing the responsibility on the auditor of the company first, and that is to in the course of performance of his duties as an auditor. So during the audit, I could say, if auditor during the audit, okay, has reason to believe that an offense of fraud involving such amounts or amounts as may be prescribed is being or has been committed in the company. Again, now I'm talking about has a reason to believe. I'm not talking about actual fraud, suspected fraud, because I have a reason to believe that there could be a fraud. So if I have a reason to believe that the amount of such, we will discuss the amount if fraud has been committed in the company by the officers or employees. Okay, so 2 things. One is being or has been committed, not only present but past also, both. Sometimes you have your fraud being committed now, sometimes your fraud being committed in past. So past and present both are being covered over here. Okay. And by the employees or the officer of the company. So it also provides who has to conduct the fraud. Then the auditor is required to report the matter to the central government. So the reporting requirement comes on the auditor. Now, if you see this particular section, okay, there are some other things also that I will be discussed, but this prima facie places a responsibility on the auditor to report the fraud. Okay, to report the fraud that has been identified during the course of audit. Okay. Now, basically, this is first and plain reading of the section 143 subsection 12. Now let's go to and let's again refer to the further details that are there. So there's a rule 13 of companies audit and auditors rule, where further details are prescribed about the amount, the way to report, and other things also. Now, what basically this rule says about? This rule says that when there is a fraud of 1 CR or more, so if an auditor of a company, again in the course of its performance of its duties, okay, has a reason to believe that the offense of fraud involving or expected to involve, now this is very important point, when it comes to the amount, what they are saying is which involves or is expected to involve individually, means I'm not saying that the fraud amount should be 1 CR or more. Actual amount. I'm not talking about actual amount. I am also talking about expected amount. So here it is not only the actual amount, it is also the expected amount. If I have a reason to believe the fraud is of amount of, let's say, 1 CR or more, in actual it may be less. But if I reason to believe that it is more than 1 CR, then I have to report. Let's say today I have a reason to believe, I suspect there is a fraud of rupees 2 CR in the company. I reported the matter. The matter went to central government. Central government hired a forensic investigator. He investigated the whole fraud, and the final amount that was, out that the fraud has happened was of 75 lakh rupees. Then in that case, am I incorrect to report the fraud to the central government at the first place? The answer is no, I'm not. Reason because here the terminology or the words are carefully designed to have or to include the word expected in them. It is not necessary that it should be actual amount, because when you identify the fraud, you might not have the time to investigate, or whether you will is it your responsibility to investigate and then report, or your responsibility is to report first. Our responsibility lies with the reporting. We will see the timeline also. Okay, so in that given timeline, it might not be feasible to get the exact amount of the fraud. As a result, if you have expectation that the amount is going to increase more than 1 CR, you have to report. Okay, so the amount is more than 1 CR or above, then the reporting is required. Okay, the reporting to the central government is required. Now how the reporting is required to be done? What is the manner of reporting? Number one, when you identify such amount, when you identify such instance of the fraud or expected instance of the fraud, okay, because here the term has a reason to believe, not actual. I'm not talking only about actual fraud, but I have a reason to believe there could be a fraud. Okay, that if I have a reason to believe there can be a fraud and the amount expected that could be more than 1 CR, in that case, first, okay, within 2 days, okay, within 2 days of my knowledge of getting that particular instance, I need to report the matter to the board or audit committee. Okay, I need to report the matter to the board and audit committee, and I need to ask them, please provide me your reply on the matter within 45 days. So within 2 days, I'll report to board and audit committee and I'll ask their reply within 45 days. Okay. I'll come to your point of ADT4. Don't worry. There is one more thing that I need to also report on. I need to discuss Sumit. So I'll come to your point on ADT4. Okay. Now, on receipt of such observation from the board or audit committee, the auditor has to report the matter within 15 days to the central government. On receipt of such reply of observation, okay, the auditor has to forward his report along with his comments to central government within 15 days from the date of receipt of such reply or observation. Means I will only get 15 days from the date when I received a reply. So how the timeline is working is, I'll just provide you here the brief about the timeline so that you can get a clarity. Reporting under section 143.12. Okay, so this is, let's say, the date of identification of fraud. Date of identification of fraud. Now from here, you will have only 2 days. This is only 2 days time is available to you. To report the matter to audit committee. Or to communicate the matter, not report, I would say to communicate the matter to audit committee. Okay, once I do that, once I report the matter to the audit committee, okay, in that case, I need to seek their reply within 45 days. So the time will start from this particular day till your 45th day. Here is your 45th day. So they need to provide their reply within 45 days. Now there could be 2 scenarios. Within 45 days, either I get a response. So within 45 days, audit committee provide reply. Okay. Or at the end of 45th day, no response is received. Okay. Either no response is received on this 45th day, or else I have a response that is received within that 45-day time period. Now, what I need to do as an auditor, once I receive the response, okay, plus my comments as an auditor. So auditor has to forward the response plus his comments. So auditor forward the response plus his comments. That is the whole report basically. The reply or the observation of the board or audit committee along with his comments. So this together will make the report of the auditor. Okay. This is the report of the auditor. This particular report is required to be forwarded to central government within 15 days from the receipt of such a reply. So once I receive, then I will get 15 days to forward this to central government. In case if I have not received any reply, okay, in case if I have not received any reply from the board or audit committee within the stipulated 45-day time period, then auditor has to forward his report along with a note that he has not received any reply. So here what I will do as an auditor is forward report plus note that no reply has been received. This I need to forward to the central government. Okay. Now the report here is in the form ADT4. The report shall be in the form of statement ADT4. So whenever I talk about this report, this is nothing but your ADT4. Now this ADT4 is required to be filed by the auditor. And again, you will get 15 days, not beyond that, to report the matter to the central government. Okay. So this is how the timeline works with respect to reporting the matter to the central government. Any doubt? Any doubt?
सर अगर कोई ऑडिटर विद इन 15 डेज में वो यानी रिपोर्ट सेंट्रल गवर्नमेंट को किसी भी कारण से नहीं भेज पाया तो और फ्रॉड है तब भी यानी क्या सेंट्रल गवर्नमेंट सेकंड चांस देगी?
See, first of all, if there is a, what do you say, miss from the side of auditor, okay, then there is a penalty provided in this particular subsection itself. In subsection, I think subsection 15 of section 143. So where it says that if any auditor, cost accountant, company secretary do not comply with the provision of subsection 12, in case of a listed entity, the penalty is 5 lakh rupees. In case of another company, which is not a listed entity, the penalty is 1 lakh rupees. So not sending on the time is not complying with the provision of subsection 12 and they can be penalized with the 5 lakh or 1 lakh rupees.
अगर कोई genuine reason हो फिर भी?
That depends upon the condonation by the central government in that case. It is case to case basis, but usually there is a penalty.
Okay, sir.
So usually, you will be given a reasonable opportunity of being heard, like, okay, before any penalty being imposed on the auditor. At that time, you can present your case, but usually, it is not like a straightforward answer. It is case to case basis that is required to be analyzed.
Yes, sir. Clear.
Any doubt till now? Any doubt? Any doubt?
No, sir.
Okay. If no doubt, then I have a question. Number one is that here in this case of reporting, is it the first time fraud? Means, let's say auditor was not the first person to identify the fraud. It was the management who was the first person to identify the fraud. Or let's say internal auditors. Internal auditors were the first person who identified the fraud. they mentioned that fraud in their audit report, internal audit report, which you got. Now tell me whether that is required to be reported under form ADT4 or not. Are you getting the point? Let's say there was an internal audit in the company. That internal audit identified the fraud in their internal audit report. You as a statutory auditor come across that report. Are you required to file form ADT4? Okay, Sumit, very good. Anyone else? Yes, if okay. Let's say it is more than 1 CR. As of now, let's understand if that is more than 1 CR. Are you required to report the matter to the central government? Yes, no. No answer? Okay, let me tell you. In that case, see, uh, in that case, the answer is auditor is required to report, even though he is not the first person to identify. And why it is so? This is something you can say a clarification order which was issued, a clarification circular which was issued by NFRA. Okay, where it was held that okay, NFRA specifically identified that auditor, statutory auditor, is duty bound to submit ADT4 to the central government under section 143 subsection 12, even in the cases where the statutory auditor is not the first person to identify the fraud. Yes, 143.12 will be applicable. So that is the clarification that has been added, that yes, 143.12 still be applicable, that the auditor has to still report the fraud under 143.12, even though when he is not the first person to identify the fraud. Okay, so even though the auditor is not the first person, he has to report the fraud.
The auditor will report to the central government regarding the fraud, and the internal auditor get first यानी उसको पहले पता पड़ता है इंटरनल ऑडिटर को
See,
fraud के
let's say
बारे
for
में.
example, internal auditor was doing internal audit, and during that internal audit, he came to know about the fraud. He reported the
Yes.
matter in the audit report.
तो यानी क्या उसे फाइनल एक्सटर्नल ऑडिटर इस रिपोर्ट को वेरीफाई करे तब तक के लिए वेट करना चाहिए, या फिर उसके लिए भी यानी कोई ड्यूटी है इस तरीके की?
So you only have got 2 days. Again, that's why the words were important. Now, if you see the words of the section, they specifically say that if you have a reason to believe. Now, if you have an internal audit report specifying the fraud, it has all the details in it. Okay, and they have reported that this is an actual fraud, then it makes the case that you have a reason to believe. It is not the actual fraud. Again, when it comes to the amount, the wording specifically says that expected to involve, not the actual amount also. So it is perfectly fine if you don't have the actual amount, but still if you have a reason to believe that the expected amount is more than 1 CR, you have to report.
बट सर यानी ये क्लॉज के बारे में नहीं, मैं एक जनरल यानी पूछ रही हूँ. तो इंटरनल ऑडिटर जो है वो मैनेजमेंट को रिपोर्ट करेगा, तो मैनेजमेंट ने अगर उस ऑडिट रिपोर्ट में इस तरीके का क्लॉज या फिर रिपोर्टिंग देखी कि यहाँ पे फ्रॉड मेंशन किया हुआ है, तो वो तो फिर यानी वो टेम्पर करने का ट्राई कर सकते हैं ना?
See, generally, sometimes what happens is these frauds are, say, what happens is internal audit is the structure of the internal audit. Yeah, remember we discussed one of these standard where we discussed about the competency, capability, and objectivity of the internal audit. Now,
Yes,
one
sir.
of the point of the objectivity was where the internal audit is reporting.
Yes, sir.
What if the internal audit is directly reporting to the audit committee, and in the fraud, the management is involved, not the audit committee? In that case, audit committee will not allow anyone to amend the audit report or will try to remove it, because internal audit is directly reporting to the audit committee. There is no interference by the management in that case.
And sir, where audit committee is not there, then board of director will get the report. Okay. Yes.
Yes. See,
Yes.
this is very specific case-based scenario where you don't have an audit committee. You still internal audit is identifying the fraud. I'm pretty much not sure that whether you will get that report or not. Like again, that is very case specific, whether who is involved in the fraud. And
Yes.
in those scenarios is rather than fraud being reported in the internal audit report, it is something like kind of scenario where if let's say for example, think about a scenario where internal audit is identifying a fraud where management is involved. They are reporting to the management and management is allowing them to report in
Yes.
the. That is something very
Yes,
unlikely,
sir.
but yeah, unlikely, but yes, could happen.
Yes, sir.
Okay.
That
Yes.
4 की रिक्वायरमेंट रिपोर्टिंग जो है वो स्टैट्यूटरी ऑडिटर के लिए, इंटरनल ऑडिटर के नहीं.
No, we will come to that point. Now, section 143. There is one more subsection, that is 143 14. 143.14. Now, what 143.14 says? This was 12. Okay. Now, 143.14 says that this particular reporting requirement is applicable to cost accountant, company secretary. These two people also. I will just show you. Yeah. 143, just a minute. So 143.14 says that this particular reporting requirement is applicable to cost accountant and company secretary. These two people are as of now covered under 143.14. So they are required to fulfill this requirement, not the internal audit.
Okay, sir.
Under this particular section. Okay, there could be other reporting requirement for the management, that is different. But here under 143, 12, 13, 14, they are not covered. Any doubts, guys? Any doubt? Okay. Now, what if the amount is less than 1 CR? If the amount is less than 1 CR, then in that case, you need to report the matter within 2 days to the board of directors immediately. Okay. And you need to provide the nature of the fraud, description of the fraud. Okay. You need to provide the approximate amount involved and the parties involved. So let me show you one reporting requirement over here for such thing. Wait. If I can get. So here, if that is less than 1 CR, then auditor is required to report to only board of directors, not to someone else. And hence, like, here, when auditor is required to report, he is required to provide details about the fraud to the board of directors. Okay. So that is here. Like, if less than 1 CR, then audit committee, he shall report the matter to the audit committee or to the board within 2 days of time frame. Okay. And he shall report the matter specifying the nature, approximate amount involved, and the parties involved. Moreover, once this particular amount has been reported to the board, then board is required to report the matter in the board report. Okay, in directors report, they are required to report this matter, okay, in their directors report about the fraud. So if I show you the directors report and the fraud that has been reported, I'll try to show you one example of this particular one. We'll go to the director's report. Over there, there is one point which specified about the fraud. Uh, Fraud that are reported to board. Wait, here. If you see this here, generally they provide a detail that, high value fraud reported to the special committee, how the fraud has been, then processed within the company itself. So high value fraud case are reported to the special committee of the board for monitoring and follow up the fraud. This committee reviews the cases, investigates and all that stuff. So they provide then this particular detail about the fraud, like what they have been reported to them and how they are dealing with it in their board report. So the content of the report might be different from case to case basis. Okay. But usually it is then, it is part of the board report where they have to specify that how they are dealing with that particular fraud. Clear with this? Any doubt till now with respect to section 143, subsection 12 and subsection 13 that we have discussed? Any doubt? And if there is no fraud which has been reported by the auditor to the audit committee or anyone, so you may find a disclosure like this way, that no fraud has been reported by the auditor to the audit committee or board, which is of less than amount of 1 CR. Okay, so then the board specifies this particular statement in their board report. Moreover, as I said, this particular requirement is also applicable to cost accountants and company secretaries. Okay, under subsection 14 of section 143. And now it comes to the penalty part. If there is a contravention of this particular provision, means if there has been non-compliance with this provision or failure to report the fraud, basically, if I talk about, then in that case, the penalty is of 5 lakh rupees in case of a listed entity and 1 lakh rupees in case of the other company. So listed, you have 5 lakh rupees. For other, then listed, you have rupees 1 lakh. Again, this particular reporting requirement also extends to the Caro. So there is a clause 11 of paragraph 3 of the Caro where auditor is required to report about the fraud which he has noticed or which he has reported during the year. So if he had noticed or reported any fraud during the year, so that is also required to be reported under Caro. So 143.12 also, Caro also, both go hand to hand. Okay. Now, coming to the part, another part and very important part is Caro. we might not be able to complete the Caro today, but let's see. Let's go through the Caro and see how much we can we are able to complete. Okay. So one such reporting requirement is, under section 143(11) of the Companies Act, central government has specified Companies Auditor Report Order 2020. Okay, where auditor is required to report on certain matters. Again, it is not applicable to all the companies. So can anyone tell me to which companies Caro is applicable? Anyone? Caro applicability. To
Sir,
which
paid up
company?
capital.
Mhm.
Sir, if the paid up capital is more than 1 crore, or the
Okay.
outstanding loans or advances at any point of time in the year is rupees 1 crore or more, and
Mhm.
also the turnover criteria is there, that 10 crore limit is there. If any of the
Okay.
criteria is fulfilled, then the Caro 2020 will be applicable, and it is not applicable to the small company and the private limited company, as well as the insurance and the banking company also.
Okay. Very good. Yes. Very good. So I call this particular requirement. There are two type of exemptions which are given under the Caro. One is BIOS 8 plus another is private limited exemption. I'll explain both. What is BIOS 8? B stands for banking company. I stands for insurance company. O stands for your OPC, that is your one-person company, which is there, like, if it is a one-person company, again, they are exempt from the Caro. Okay. S stands for your small company. 8 stands for your Section 8 company. So BIOS 8, BIOS 8, okay, is the keyword for the first type of exemption in the Caro. Second type of exemption under the Caro comes as a private limited exemption. Now, what this private limited exemption is, I call it P1D1R10. Okay. So if there's a private limited exemption, you need to see about P1D1R10. That is, your paid up share capital is less than 1 CR. Your debt 1 CR, and your revenue, okay, is less than 10 CR. If these conditions are satisfied, then you can get an exemption from the Caro. Again, paid up share capital less than 1 CR, debt less than 1 CR, total revenue less than 10 CR. These are the conditions should be there to get the exemption from the Caro. Now the question comes is whether these conditions 1, 1, and 10 are something like, okay, if I do that, okay, one paid up share capital, then I'm not required to check for other conditions, or it is something or and, or what is the scenario? So here understand one thing, this is and means compulsory, you have to satisfy all the 3 criteria to get the exemption from the Caro. Okay, it is not the or, but it is and. Now, another point is paid up share capital, debt, and your revenue of which date. So when it comes to the paid up share capital, it should be as on balance sheet date, debt at any point in time. And when I talk about revenue, it is for that particular year, including the revenue from the discontinued operation. Okay. So when I talk about paid up share capital, that is all as on balance sheet date, debt at any point, and revenue for that year, including discontinued operations. Okay. So if you have discontinued operations, you need to include that also. So these are the two exemptions which are there under the Caro. Clear? Any doubt with respect to this one?
So this paid up share capital is on balance sheet date, means the latest audited balance sheet, na?
See, now if you see the wordings which are given under the provision, it says that as on balance sheet date, it does not specify, audited balance sheet or something. So it has to be construed on that particular balance sheet for which year you are checking. So if I'm checking for the year, let's say for which I'm auditing, then that particular year and the balance sheet date means 31st March of that particular year.
Okay, sir.
And anywhere, if you see Caro 2020's requirement, okay, anywhere they have not specified about the audited balance sheet, about you can say any other, like word audited with respect to any of the word. So it is not like when say I say revenue, okay, as on the financial year end, okay, as per the financial statement, they are not specifying audited finance sheet or unaudited finance sheet. Oh, financial statement. Okay. Audited financial statement or unaudited financial statement. They're not specifying that. When I talk about paid up share capital as on balance sheet date, they're talking about balance sheet which is audited or unaudited, not specified. So I have to consider both. It is not necessary it should be only audited. I have to consider unaudited also. Clear? Any doubts? Okay. If no doubts, then let's proceed, okay, and understand few more terms, few more things about the applicability of the Caro. Now, first thing is, let's say, what is the exemption for the small company? That is 440. Remember 440 criteria that we discussed? When I come to a small company, the criteria comes is 440. What was that criteria? 4 crore paid up share capital and turnover 40 crores. Okay. Now, let's say if X Private Limited is having paid up share capital, okay, more than 1 CR, that is 3 CR. They are having turnover more than 10 CR, that is 20 CR. Their debt, however, is nil. Now you tell me to this particular entity whether Caro will be applicable or not.
No, sir, not applicable.
It is crossing the private limited exemption.
But sir, it is falling under the small companies definition.
Yes. So which one is having a priority when it comes to the Caro? Whether small company will have a priority or whether private limited exemption will have a priority?
It's small companies.
Absolutely correct. Yes. When it comes to the priority, it has to be understood and construed in the way it is given in the Caro itself. If you read the Caro, okay, or if you read the applicability clause, basically it specifically says that first comes the small company, first comes the 1% company, and then comes the private limited company. So the way I will apply the exemption is, I will check first this company, whether this is a small company. Okay. If yes, then I will not even go for private limited exemption. I will straight away say it is Caro not applicable. But if this does not fall under the exemption of small company, then only I will go and check the private limited exemption. Are you getting the point? So the private limited exemption is only required to be checked once you have verified small company exemption, OPC exemption, or all the bioethic exemption. If all these, like, companies not falling in any of the category from here, then only you go for the private limited exemption. Clear? Any doubts?
Clear, sir.
Yeah. One more thing I would like to specify over here is with respect to a company, a private limited company, which is a subsidiary or a holding of a public limited company. Okay, if let's say, for example, this X limited, X private limited is fully owned subsidiary of ABC Limited, then would I be able to get the Caro exemption? If this is a fully owned subsidiary of a limited company, public company, then will I get the exemption of the Caro?
No, sir.
No, sir.
Okay. Now I'll change a word over here. Instead of fully owned subsidiary, I only write a subsidiary. Like here, the public limited company, which is their ABC Limited, is holding 60%. Okay, is only holding 60%. The rest 40% is a minority individual shareholders. Now tell me whether the exemption will be available to a private limited company.
No, sir.
This is not a fully owned subsidiary.
Then also, sir, because it is a subsidiary of a listed entity. And when it is a listed entity subsidiary, it will also considered as a public interested or a listed entity.
Absolutely correct. The term which is specified is the subsidiary or a holding company. It does not say fully owned subsidiary. Okay. So it is not applicable to a subsidiary or a holding company of a public company. In that case, this particular, even it is holding 60%, then also no exemption available. Now, let's say this particular company was a foreign company. If X Limited or X whatever, it is a foreign company. In that case, what you will do? Whether this exemption is available?
Yes, sir, it is available.
It is a foreign company under the company registered under the Companies Act. So, do you think the exemption will be available?
Sir, is
Considering they are satisfying the criteria of still small companies.
No, sir, exemption will not be applicable. Right.
It will not be applicable. And why?
Sir, it is also you are considering as a subsidiary of ABC, or it is another.
No, let's say it is not a subsidiary. This is not a subsidiary. I'm not talking about subsidiary over here.
So there is no exemption available to the foreign company, hence the Caro will be applicable.
No exemption available. Okay. Answer is yes. No exemption available. I'll tell you the reason why. Reason because first of all, Caro is applicable to a foreign company also. Now the second question comes is whether a foreign company can enjoy exemption, your exemption under like 286 of Companies Act, like whether they can enjoy the exemption of a small company. So the answer is no. Small company exemption is not available to your foreign company. Okay, so that's why they will not fall under the category of the exemption list, and they will have to be, they have to be, auditor has to report on the on these particular items which are there in the paragraph 3 for the foreign company also.
But why
So,
it is not so available?
hmm?
So if the foreign company is falling under the definition of small companies, then why the exemption is not applicable? What is the rationale behind this?
Basically, small company definition is not applicable to a foreign company based on the words that are given. If you interpret the way it is given, like, a small company definition, okay, so it only includes a private limited company, the definition, other than a public company. So accordingly, you need to understand. Let's see, foreign companies are not your private limited companies. Okay, so that's why for small company exemption will not be applicable to the foreign company. Okay. So for basically, Caro specifically says it is applicable to foreign company. Caro specifically says that it is applicable to a foreign company. And if you see, there is a definition of under Companies Act. If you see the Companies Act, there's a section 242 which specifies the foreign company. Okay, which says that the company which is incorporated outside India. And when you read the definition of a small company, it refers to the company which is incorporated within India. Okay, so when it terms small company, when it refers to the term company, it is referring to the term which is company incorporated in India, not to a company which is incorporated outside India. But 242, which is definition of a foreign company, it says company incorporated outside India. That's why a small company definition, foreign company will not be part of your small company. Clear?
Yes, sir. Yes.
So this was with respect to the applicability of the Caro. Okay. Any doubts till now? Any doubts?
Sir, Caro is applicable to the NBFC company, na?
Yes. Reason because here, if you see, the exemption is only to banking insurance, not to NBFC. So Caro is applicable to NBFC as it is applicable to other companies.
Okay, clear, sir.
Any doubt, guys? Any doubt?
So my doubt is not related to the current discussion, but when we discussed Rule 11,
Yes.
in that case, there was a particular point that is second point where we said that if the material foreseeable loss is there, then we have to report. But in case the foreseeable loss is not material, तो उसको हम कहाँ दिखाएंगे रिपोर्ट में? मतलब actually I did not attended that lecture for key audit matter paragraph, emphasis of matter and other matter paragraph. So my question is which head this will be reported?
Okay. See, what is the reporting requirement? The reporting requirement under Rule 11 is that whether the company has made provisions for the material foreseeable losses. Okay. Now, when you are required to report under this paragraph, when the company has not made provisions. Now, the question is, if the provisions that are not made by the company are not material, first of all, they will not come into your qualifications. Because if that is not a material, then will I qualify my audit report, assuming there is no any other qualification or there is no any other misstatement?
No.
Answer is no. It will not be a part of a qualification. Now, if that is not part of your qualification, if the provisions which are not made by the company are not material, means in the material terms, company has made all the provisions. I can say in other words, like there are certain provisions which company has not made, very small amount. They are not material. But other provisions company has made. So materially, company has made all the provisions. In that case, what I will say is this could become a significant difficulty area or area where I could encounter significant difficulties. And that particular paragraph or that particular point can come into my key audit matter paragraph, where I can say, okay, this was the area where it took my significant time. Auditor invested a lot of time, and after auditing, I have not identified any material misstatement. So my opinion is not modified in respect of these matters. Over there, I can report in key audit matter paragraph. Clear?
Yes, sir. I was means confusing that this point will be there under the point F of that 133, where we said that if any matter is having adverse effect on the functioning of the company. I was thinking that it will cover be there.
No. See, if it is adverse effect, on one hand, I'm saying it is adverse effect, but on the other hand, I'm not qualifying because this is not material. Both cannot go, on opposite direction. One, I'm reporting adverse under F. If I do that, I have to qualify also, but it is not material. Then how can I qualify? If it is not material, it cannot have an adverse effect, so it will not come under clause F.
Yes, sir.
Any other doubt, guys? Any doubt? See, it is very important that you understand the concepts where the reporting is required to be done. Okay, so here we are understanding the reporting requirements of the auditor, the reporting duties of the auditor and reporting responsibilities of the auditor. And it is necessary that you understand how, where, and when auditor is required to report. Okay, if no further doubts, then I propose to keep the session till here, and I will see you in the next session then. So be ready with the rest of the part. I think small Caro part is only remaining that we need to discuss. So we'll discuss the Caro and then we'll move to the next chapter then. Okay. Thank you, guys. Thank you for your time. Thank you for participating in the session. I'll see you in the next session.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir. Good night.
Good night. Thank you.